So step by step on this one. So the first thing that I was interested in once I saw that Broadcom was gapping up, the first thing I was interested in to see what the ATR is, the average true range. So on average day, right, how high as far as price does the stock move? And the average true range of Broadcom is $15. So on a daily average, it moves $15 either up or down. So once I've determined what the average true range was, right, that was like my step number one. Once I determined that, I went into the 15-minute chart. And what I noticed here is that from the time that the market opened up and Broadcom began trading, it went from $416 all the way to a high of $434, almost 35. So then what I did, I just zoomed it into the 5 minute. And the last thing I did the Fibonacci retracement from the low where it opened up to the high, right? The high being right here. And I explained to you guys that I wanted to buy at the high, and I said 417.5 puts. And from there, I wanted to take profits at the 38.2 Fibonacci. And that's exactly where we took profits. Took profits right here. And because the move all the way up here, 5 minutes, 10 minutes, 15 minutes, right? The move, which was higher, much, much higher than the average true range, that is manipulation. That means that's big institutional buying, right? As soon as you see big institutional buying, such as this, it has a tendency, right? 90% of the time, it retraces right back to the 38.2. So that's the strategy there. And of course, right after that, uh, sold. This was the trade here. Sold, and we made 43, almost 44% in less than 10 minutes of trading. So that was a beautiful trade right there. Any questions?